dig it, Satch?
What's good, everybody? Happy Monday. Welcome back. God, I hate the weekends. It's like you can't do anything. Market's not open. Make videos or whatever, but I like being here doing the work. So let's talk about what's happened this week, or what's starting to happen this week. Catch my bearings. Get back with you guys here today. Markets were down a little bit to close out the month. The month was actually a little bit positive. Not great, but a little bit positive. So not so bad there. I do have some concerns. We'll go over those in a second. Earnings for companies that have reported already, now 79.3% of them have actually performed better than what the market was expected. That's down just a touch. And that number is going to maybe not fluctuate as much now because we're coming towards the tail end, or we're over the hump for earnings season. But we still do have 100 names reporting earnings this week from the S&P 500. So we're not done by any means. We'll go over that in a second. And yes, you're correct. Apple is the one stock that will be moving this market this week, hopefully for the better, but it's going to be an interesting one. We'll go over that in a second. As far as economic news, personal consumption expenditures, if that's something that you follow, was the biggest, had the biggest year-over-year gain since February of 2017. Core personal consumption expenditures was higher by 1.9. Basically, we just say CPE. I just was spelling it out for you. So core CPE, if you follow this sort of thing, is the Federal Reserve's #1 tool that they use to kind of gauge inflation. So the prices that you guys are paying and that we're paying out at the stores and stuff, steadily increasing. The Fed will no doubt be watching that. Pending home sales came in, very small increase, very, very, very small increase in pending home sales. And the bottom line is people that can find the homes that they want to buy can barely afford the homes. They're really, really expensive. So little inventory and prices surging there gave us just a small increase in pending home sales. So if you follow that sort of stuff, then there you go. There's your update. Let's talk about the stock market here, because if you've been following us for a while, we use the charts and we show you that nothing is going to happen seriously until we go above this red line or below this red line, the real bold one there, not the wavy one. So basically, we're just chopping around back and forth. Notice how when the markets moved higher to start the day today, not much happened, right? So it was, people don't want to be the one that buys right into a known resistance area. And so the market sort of pulled back. And notice how when we sold off, we closed at the lows, but it wasn't sort of an too aggressive of a sell-off going into the close. I do have some concerns about this market, mainly because of the financials. If you watch the financials day by day, all good news is not interesting, and all bad news seems to be a reason to sell. Today's no exception. JP Morgan, Citigroup, things like that helped pull the financial sector lower. I really feel like the financials are what's going to crack here and pull the S&P 500 down under this support line there that we'll just keep extending to kind of show you how it works as it goes. But man, I'm not too excited about the financials. So you know, that's one of those things where if you're a short-term trader, you got to watch this really, really close. You got to pay very close attention to the financials and almost some of the semiconductors. They tried a little rally last week, but just couldn't get anything done. It seems like it's going to be a little bit weak going forward. So I'm not like super bullish on this stock market right now. Like I said, maybe Apple comes out and impresses everybody. But here's the thing with Apple. This is an interesting sort of what do you call it, earnings announcement. It will be an interesting one, because remember we've kept you updated on how suppliers, other cell phone providers, and analysts have been saying the iPhone sales cycle is getting longer and longer, and therefore demand for the phones is less and less. So we're all kind of expecting Apple to say something about that. Now, does that mean that you sell on that news, or did everybody already sell on that news and the actual sell-off would be a buying opportunity? See, in Apple, if you go back and follow all their news events, their Apple Day or whatever they call it, what's the thing they call it? Apple Day, or where they, you're invited to the conference and everything. That's always been a buy on the news, sell on the, or buy on the rumor, sell on the news sort of opportunity there. So this earnings announcement, I think, is going to be very, very interesting. Of course, we'll see when we get there. That'll be tomorrow after the close. So after the close, we'll be talking about it here on this show, of course. Well, let's go over to the actual markets here, because you had the Dow down on the day by 144, the S&P 500 we talked about down 21, still stuck in that range. By the way, the other markets are also stuck in similar ranges. You could draw the same sort of support and resistance. Notice how it's just all the same thing in here. Little different support areas, but basically the market's sitting in between those same, or the Dow sitting in between those same ranges. The Nasdaq 100 was lower by 53. That's kind of a hot mess right there. So we'll see. Good earnings so far. Positive economic numbers have been helping the market up to this point, but earnings season's not over yet. And of course, Apple is the big one we'll be focused on. Let's go back over to some other charts. Things you'll see in the news today. T-Mobile, if you haven't already seen, T-Mobile and Sprint was probably the dominant headline today. There wasn't really a whole lot to talk about in the stock market. But T-Mobile, they announced that they want to buy Sprint for $26.5 billion. So they got to get that deal done. They got to get it past regulators, but very smart on their part, because this sort of new Trump government has been very laid back against deals like this. So these guys are taking their shot. They were all over financial media today saying how this is going to be lower prices and we're going to bring in more jobs, blah, blah, blah. They have to say that, and they're going to continue to say that to try to push regulators to do what they want. Very good timing, in my opinion, but investors are really, really skeptical, because T-Mobile was down 6.2% today, and Sprint got the worst of it. Sprint was down almost 14% on the news. Nothing too crazy there. Just, there's a lot of people going, yeah, you're not getting this deal done. So that was T-Mobile and Sprint. Let's go over to Mr. Burger Maker. McDonald's was the leader in the Dow today, was it not? I think it did finish. Yeah, it was the leader by a lot, almost up 6%. Global sales, when they reported their earnings, global sales better than expected, higher U.S. sales better than expected. And do you know why their sales were better than expected? Because McDonald's has been transitioning to try to keep up with the other burger people out there, Five Guys and BurgerFi and everything. And what they've been doing is bringing more technologies to the stores. You can go up and just like order from a screen now. You don't need a human. They're making the stores more welcoming. Now they got like TVs in there by where you sit and eat and stuff, so you want to hang out for some reason at McDonald's. And then the last thing is they have now like a $6 and a $7 burger. Does anybody eat there? You guys could tell me. It's $6 or $7, they said, where it's made with higher quality ingredients and more expensive beef. So now you can spend $7 on a burger there if you want. Their prices are slowly going up. They're doing a good job with it. I'm not going to argue with it. They're making that change, and for a massive company, not bad, right? So they're making this change. Investors like that. Technical traders, if you follow the charts, you love this breakout today. You love what happened there. You love the fact that this stock convincingly made it over a range, more importantly, the 200-day moving average. So if you like to follow charts, there you go. I talked about the charts for a second. Walmart was also in the news. Oh, it only finished up 1 1/3% today. They're working a deal to sell a majority stake to a British grocer. Really, really cool what they're trying to do, because the end result of this transition gives them a minority stake, although a very large minority stake, in what it will be the merged company, and it would make it the grocery leader in all of the UK. So Walmart's playing a really cool deal. If you like reading about how companies make sort of interesting acquisitions and make deals with other companies, this would be a good one. It'd take you about a day to read it, but it's really, really cool. So that's that one on Walmart. Lastly, it looks like Twitter. Something happened with Twitter towards the end of the day. Yeah, Twitter's actually working with Disney or ESPN now to do some more live content, possibly some more paid sponsorships. So Twitter, actually, that must have just happened in the last few minutes of the day. Oh, it did. Yeah, right around, 2:15. Twitter shot up on apparently that news that is just now coming through, or at least that's the first I'm seeing about it. Okay, as for earnings, there's a lot of no names reporting. Let me just go through them. Nobody interesting. Akamai, good old fan favorite of mine. Let's see how Akamai is doing. AAPL up 2% after reporting earnings, a little bit more now. The rest of these are sort of soft as far as what's happening after earnings, or stocks that you're not really going to get a lot of media attention on. So not too big of a deal. Tomorrow will be all of the excitement, and then going through the rest of the week. If you guys have any questions, happy to help you with this now. We're bringing back the Doe Show, by the way. There's a lot of things going on here at Jazz Wealth. You wouldn't I don't know how to say it, but a lot of things going on. We're actually bringing back the Doe Show. We're going to do it 1 day a week. We're actually just going to cover personal financial topics, real laid back, just things that happen with your money, with your credit, with your budgeting, different companies, any sort of news that came out that you might not have seen on TV. The other thing is the budgeting portion of our class that we put together is almost available. It's going to be out this week, so clients of ours are going to get that probably in an email. I don't know exactly how I want to get it to you guys yet. I want to make sure everybody gets it and I don't like bombard you with emails. So we're working out the details on that. It's not bad. It's not bad. So we'll see. And all kinds of good stuff. Yeah, I'll leave it at that. I want to keep it somewhat of a secret. Anyways, that's all I have for you. I really appreciate you guys that join us here live. We'll see you next time. We'll be back tomorrow. Apple's earnings. If you have any questions or you're interested in anything we do here at Jazz Wealth, jazzwealth.com. Chat with Jazz, ask a question, whatever you feel like. That's my sales pitch. I'm out. Have a good day, guys. We will talk to you tomorrow.